Hello there and welcome to the Stockyard. My name is Ryan Koehler and this is my co-host Taylor Chatwin.
Hello. In today's segment, we will be covering how to pick the best stocks to invest in based on the correct ways to research the company. So we're going to jump right into the heart of the matter. The problem these days is that some people buy companies, or buy shares, based on only the name of the company. They don't bother to look at any background information, which is important when you're trying to pick a good company to invest in.
Before buying stock in a company, you should always look at the characteristics of the stock. You may wonder what those characteristics are, so I'm going to tell you. Some key ones to look at are the previous close and the current day's opening price. If yesterday's close was lower than today's opening price, you can see that the stock is rising, even if it's just a little bit.
You should also look at things like the 52-week range in the graph. In the 52-week range, you will see the lowest price the stock was over the past year, and you'll also see the highest price. It is within those numbers that you can see the range in which the stock fluctuates, and make a decision on whether or not to make the investment. When looking at the graph, you should look at how the graph is trending. It could be trending up, down, or remaining steady. All trends are good indicators to a potential investor.
Aside from what you see on the stock exchange, you should look into the earnings of the company or the debts of the company. A company with high debts is probably not a sound company to invest in because it most likely means that the company is not making enough of a profit to get out of debt or to keep themselves afloat. Companies with high earnings are better to invest in because they can stand alone and they most likely are doing good things in terms of productivity and innovation.
The final important things to look at when you're researching in stocks is competition and popularity. You typically don't want to invest in a company that has boatloads of competition. Say you invest in a department store type of company. Think of all the other department stores with the same exact product. It is worth investing in a company that, is it worth that? Investing in the company with all the same products? Probably not. Then think about a standalone company, such a company that is the only maker of a certain part inside of an airplane. That company has no competition and it's needed for all the air travel. It is probably worth investing in.
Right. In terms of popularity, you want to invest in a company that people purchase from or really like. You want to invest in companies like Apple because people want their products and they are innovators in the technology industry. You want to invest in companies with big plans for upcoming ideas and a large demand. Investing in companies like those are gambles worth taking.
That is all we have for you today on the segment in the Stockyard.
We hope you all feel smarter and invest in companies that will make you rich. We will see you next time.
See you next time.